Uncertainty is a normal way of life on planet's stock market. People living on this planet fully accept all possible outcomes of uncertain events with no internal conflict. They understand either the outcome will come in their favor or not. They accept any outcome because they believe that there is no way to predict the outcome of uncertain events. They also believe that there is randomness among the outcomes of uncertain events. Recognizing the randomness inherent in the outcomes of each uncertain event eliminates the egotistical need to be right. To help manage the uncertainty objectively, people of this planet have developed their edges, which gives them a higher probability of success. For this reason, they have trained their minds to think in probabilities. For example, on Earth, our day-to-day activities have almost a certain outcome. We are in better control of things. For example, if we have to drive back from our work to home, we get from our workplace to home with a high level of certainty. Now, imagine you lived on the planet's stock market where day-to-day activities have a high level of uncertainty. Say you need to get to your home from your office after a long day of work. The only option is to take a cab. Now, imagine you standing on a busy street trying to catch a cab to take you home. The street is full of cabs. Remember, life on planet's stock market is highly uncertain. It means a cab which you are expecting to take you home may take you somewhere else. However, you being the resident of this planet know very well how to manage uncertainty, since uncertainty is a way of life here. You are at ease with uncertainty, as the people living on this planet have had a lifetime of conditioning to accustom to manage uncertainty. So you stop a cab on the street, get inside the cab, and tell the driver where you're going. The driver starts driving. You start looking outside the window to make sure the cab is driving in the direction of your home. As long as the cab is driving in the right direction, you are okay with it, and you continue to keep looking outside until you reach home. When you arrive home, you have accomplished a task that had a high level of uncertainty. Now, imagine the other case. You need to get to your home from your office. You are standing on a street trying to catch a cab to take you home, so you stop a cab on the street, get inside the cab, and tell the driver where you're going. The driver starts driving in the direction of your home. After a while, the cab takes a route which is not your home route. As soon as you notice it, you stop the cab and get off from it and start looking for another cab. You continue this process until you reach home. Here is a limitation. You can carry a maximum of $100 cash. The cabs only take cash. They will charge you anywhere between $10 and $20 as soon as you get inside the cab, and there is no refund regardless if they take you home or not. This means if you run out of cash before reaching home, you will need to walk to your home, which can take several hours. The further you are from home, the higher the cab charges. To help the inhabitants of the planet's stock market deal with uncertainty better, there are tools available that associate a probability value of success to their uncertain tasks. In our example of taking a cab to home, you can get glasses which, when you wear them while standing on the street to catch your cab for your home, will display a probability number for each cab to take you home successfully. The edge with the glasses guarantees you will get home if you take the cab 7 out of 10 times. It means if you follow your edge correctly and manage the risk of running out of cash effectively, you will reach home without walking. In other words, the glasses provide an edge to make a better choice of picking a cab to reach your destination quickly and without running out of money. Since the inhabitants of planet's stock market are born and raised with these uncertain conditions in their day-to-day life, they have accounted for the uncertain events as a normal way of life, and hence they do not feel betrayed or rejected or get negatively emotional if an outcome does not go in their favor, because they keep their expectations realistic. Instead of getting negatively emotional with an unfavorable outcome, they deal with the uncertainty in a more objective way, to have the odds of success in their favor. 1. They have a mindset which accepts the risk. 2. They have a mindset which thinks in probabilities because they know they can't predict the future. 3. They have an edge, like glasses in the example. 4. They understand there is a random distribution between uncertain events. 5. They get out of an uncertain event as soon as they realize the outcome will not be in their favor to stay efficient in their money management. 6. They accept that they have control over the process of managing uncertainty, but no control over the outcome. Please keep this example of living on an uncertain planet in mind when trading in financial markets. To be consistently successful traders, we need to act like people on that planet to manage the uncertainty of financial markets successfully. The market environment, just like the uncertainty on that planet, is diametrically different from our real-life situations. It's unpredictable, and we need a different mindset to overcome the challenges of surviving in such an uncertain environment. That's why mastering trading psychology is so important. It is the way to help you find the right mindset to manage the unpredictable nature of the markets.